All right, so I want to show you how I'm creating the data for paper 2. I'm in Bloomberg. This is the Bloomberg machine. To get a Bloomberg machine account, you come into the FSC and you click on the Bloomberg button, and then it asks you to log in. When you click on the login button, you'll have a button that says create new account. So just follow the instructions, create a new account. They will give you a username. You can change that, and they ask for a password. What I recommend, either for the username or the password, especially the username, what you could do is change the username to your ABC123 from UTSA, just to remember it. And you could use a similar password you use for UTSA, although it may be too many letters, but you'll just have to see. But you get an account. And so what I'm doing here is I'm using various aspects of Bloomberg to bring in data. So I'm going to try Netflix. Netflix's ticker is NFLX. On the Bloomberg button, I press the function 8, which says equity. And then what I'm going to type is GP, which is the graph to price. So Netflix, you can see it up here at the top. NFLX, equity to say that it's a stock, and GP. When I do GP, I get a graph of the company's stock. I'm going to click on key events, and then I'm going to edit the key events. You hit this edit chart, key events, and I want earnings. And there's the earnings right there. So I'm going to click on earnings, and we'll bring up their earnings. And so what I'm going to do is I'm going to export that. And when I do that, I get all the data in Excel. What I'm going to do is, just so it works well with the spreadsheet we're creating, I'm going to delete column D. And let's look at these columns. Column A is when the report was published. So this is going to be very important. They say on the 18th. You can usually tell by volumes. If they reported before open on the 18th, the 18th volumes will be very high, because on earnings release days, there's a lot of stock transactions. If they reported after close on the 18th, then the high volume will be on the 19th. So we'll just look at that, and we'll have to decide which of those days is the appropriate date. It tells you what quarter they're reporting for, and this can be a little unusual because some firms have fiscal years that are not calendar years, but it lets you know this is not their full year number. This is their third quarter. They'll be reporting the full year next time. They say the next column is reported. This is the actual GAAP earnings per share. The next one says comp. What the comp is adjusted GAAP earnings per share for any unusual items. You can see for Netflix, there's no difference. They're the same, but for some companies, they can be quite different. So the purported and comp can be the same. We only care about the comp. The comp means comparable. That's the comparable to the estimate. The only time you have to worry about reported is if it's materially different just in the current quarter. You don't have to worry about prior. If it's materially different, then you might have one comment in your paper saying Netflix reported $3 per share, comma, $3.73 after adjusting for X. And after you make that comment, that's the only comment you have to make. Why is there a difference? You make that comment that there's a difference. After you say that, you ignore the reported and only talk about the comp. Column F is the estimate. So you can see they beat by 6.97%. I'm going to take the current quarter and all the way back to the prior year. You're going to see the prior year's quarter is important because we want to compare this quarter to the same quarter last year. Because of seasonality, we can't compare this quarter to last quarter because it fluctuates quite a bit because of holidays and other activities. So I'm going to copy these, and I'm going to put them into this spreadsheet that I've created. Paste it right there. I'm going to say that this is now Netflix, NFLX. So I have Netflix's numbers. I have that their earnings beat by 6.97% and are up 20% from the same period last year. Last year, they reported $3.10. This year, they reported 3.7. So you can see we compare those two. We don't need estimates for prior periods, so I can get rid of those. We only care about the estimate for this current quarter. Now, the prior periods can be interesting if you want to say, have they beat consistently over time? That you'd have to come get your own data. You can see how they've done historically by bringing in all the data. I don't give that to you in the spreadsheet you have, but if you want that information, if you want to say they beat the last 3 quarters in a row, or however you want to say it, you can see last January they reported 12 cents, what the market was expecting 42 cents, and so that's a pretty big miss. And yet their stock price was up, so that's the unusual aspect of here. Here you can see their stock price is up 16%, which is the reason I'm using Netflix. So that was their earnings per share. I'm going to get rid of that. And the next thing we're going to do is revenue. So go back to Bloomberg, and instead of earnings per share, I'm going to click on revenue. You can see it's in billions. I'm going to export that. Again, I'm getting rid of column D because I don't need that. I'm then going to copy these. Current quarter and the same quarter last time. You notice there's these letters in here. We'll have to get rid of that. So I'm going to copy revenues in here. And now I have to get rid of those B's. I'll just do it real quickly. And I'll give it a couple of decimal places. So you can see they just barely missed on revenues, and their revenues are up 7.8% last year. We don't need the prior, so we'll take that out. So now we have revenue. The only thing is the revenues were in billions, not in millions. So I may have to adjust that each time. The next thing we're going to look for is gross margin. So I'm going to go over the gross margin. I imagine they're pretty high. Yeah, 42, not as high as I would have thought, but they're pretty high. So I'm going to export that. And again, get rid of column D. And here we're going to copy all of those over. And here, because gross margin is a percent, remember when you're comparing a percent to a percent, you talk about how much you missed or beat in basis points. So they were expecting 42.077. They got 42.27. So they beat by 20 basis points, and they're 269 basis points above last year. Look at that, 42.2, 39.58. That's 269 basis points. And I do that in a formula so you don't have to calculate it yourself. That's gross margin. The next thing we're going to do is EBITDA. Now here, sometimes it's in billions and sometimes it's in millions. So we'll have to make that adjustment. I'm going to bring this in and take the last few quarters. And again, we're going to do this in billions. So now here I'm going to take the million out, but I'm going to make it, instead of 643 million, I'm going to make it 0.63 billion. Same thing here. I wish they wouldn't do that, but it's the way it comes over. So, oh, and I copied it in the wrong place because I forgot to get rid of column D, so sorry about that. So they beat by 0.34% and are up 15% from last year. So I can get rid of these files because I don't need them anymore, even though I forgot to delete that one column. So you can see how Bloomberg allows you to bring in a lot of information right into Excel very, very quickly. So that's their EBITDA. I put it in billions. And then their EBITDA margin is just taking their EBITDA and dividing it by revenue. That's your EBITDA margin. And here again, because it's a percent, we say they beat by 6 basis points and they're 143 basis points above last year. So there's Netflix. I'm going to Now copy in the stock performance. To do that, I'm going to put Netflix in there in this report. This file is called the GIP. It's intraday price. We got to figure out what day we're interested in. So it says they reported on the 18th and they were up 16%. So I can try the 17th and the 19th, and it really does look like the 19th is the day. So I'm going to do from the 18th through the 19th. And that really was the day that it came up. Now, the reason it doesn't show 16% here is they're not showing the change on the 19th. They're showing the change the 18th and the 19th together. So it was down on the 18th, but up on the 19th. I'm now going to take that and I'm going to make a picture of it. I'm going to copy that over to our spreadsheet. I'm going to shrink it down a little bit, but now we have a good graph to show. It doesn't show us the return on that day, so that 12% is not the number we want, but we have another file here that we'll use. So we know you want the 18th to the 19th. So this last one, this is called the COMP function. So I'm going to do NFLX, hit that function 8 key and type COMP. It's one of my favorite functions. And we know we want to look at them from October 18th, 2023 to October 19th. It's interesting to have it under telecom, but that's fine. So 18th and 19th, you see they're up 16%. What competitor can we put in there? Let's try Disney maybe. We can see that Netflix was up 16% when the S&P was down slightly. Telecom was up 0.33, probably because Netflix is in there and they're up 16, so they're driving that. Disney was actually down. Maybe Disney's not the best comparison company, but it's hard to find other comparison companies. So I'm going to bring that one over. And you can see they don't annualize that because it's such a massive number, but we don't need to annualize number anyway. I really should have taken out the annualized, so I'll take out the annualized. So how did they do? They did 16% when the market was down. They beat Disney, so it gives you a lot of information. You see a graph of how they did. So the key here is you want to make sure this 16% is in context. Now, 16 is a lot, but if the S&P had been up 17%, the 16 wouldn't have been so great. And that's kind of unusual for that to be the case. 16% is a pretty massive number. So obviously with 16%, you're beating the market, but the market could have been up 3 or 4%. It could have been a huge day, but it was a day when the market was actually down a significant amount, 0.84%, and their competitor was down, and yet they were up 16%. So it's obvious Netflix had information that the market really, really, really loved. So there's all the information we need. Now, what else can you do with this? So I can type Netflix again, NFLX, in the function 8 key, and this whole menu comes up. So let's try company events. So the company events, you can see over here, they have earnings calls, earnings releases, earning calls. So if we click on this one, this is 10/18/23. If we click on that, here's the transcript of the call. You might be able to get, well, the webcast if you want to listen to it. So they have a link to that. The transcripts I discovered have been, I think they're computer generated and they can be pretty messy, a lot of typos, but it's a lot of stuff. But if you want to get some great quotes for your paper, you can certainly do that. That's pretty interesting stuff. You can see they're pretty lengthy, but I would encourage you, if you've never listened to an earnings conference call, that you listen to at least one so you can talk about it in an interview. So here you might actually go back and click and listen to the call itself. So that's a pretty useful site. The other thing we can do here is you got the Bloomberg Intelligence. What Bloomberg does is they provide you a lot of analysis of the company. If you want to read through that, there's probably some good stuff here. The nice thing is you can actually send this to yourself. See that send key? And you can type in your email account and send that to yourself. And there's going to be some great quotes in there that you can use. This is Bloomberg's own analysis of Gaitha and Kevin. So that can be really, really helpful. And the other thing you can do is this company news. If you click on company news and you change the date, so custom dates, and you want it on or before the 19th, because that's when they issued earnings. Netflix, you get all kinds of articles on their earnings. Netflix increased subscription prices. Netflix earnings make Fubo TV a tough bet. Netflix resetting expectations. Here's one. Netflix's CEO discussed roadmap to make it very, very small. So the streaming giant has largely kept quiet about its long-term plans. So, look through and see if there's something there. This was published on the 20th. There may be something there. Netflix has maintained overweight. Netflix strived. There's going to be a lot of them on the 19th. So you look on the 19th and just see maybe early in the day, Netflix surprises. Netflix plans to raise prices. That could be part of your paper. You might click on that one. Netflix sees big rise in third quarter subscriptions. That might be an interesting one. So get some good quotes. So what you're trying to do is find some great insights that you can add to your paper so that you can make a convincing case that 16% was reasonable, or that 16% rise in price was overdone. The market overreacted too positively. It's hard to say that 16% would be underreaction, but it's possible the 16% is legitimate. So they're seeing more subscribers, which is obviously, if you're going to talk about Netflix, number of subscribers is going to be huge. You had the actor and the writer strike going on. You're probably going to talk about that. You have what's going on with their competitors, all those kind of things to help understand how the market is interpreting this. We know Disney has been struggling. Maybe Netflix is doing well because Disney is struggling. Those are the kind of things that you're looking for to be able to provide analysis of your firm. So let me show you an example of a Netflix paper from last year. So this is a year old. So last year, you remember, so last year their earnings were $3.10, pretty strong, and then they had a really bad quarter after that. So if we look at this paper, they'd start with an abstract to talk about what's going on, the earnings per share. So there's that 310 versus expected. So a 46% surprise, and 319 for the last year. So remember, you need to say what, this is just like paper one. What was their earnings? What was expected, the percentage surprise, and how was it versus last year? Now, with the employment report, you talked about it, how it was last month. Here we go an entire year prior because of seasonality. So you want all of that in there. Actual, expected, prior year, same quarter to last year. Now, 46%, when we say surprise, we also use the words beat or miss. So they beat expected by 46%, or they missed expected that they were lower. If the 310 was 310 versus expected of 340, they would have missed. So you either say beat or miss or surprise. Surprise is usually positive, so you might say a 46% surprise, or they beat by 46%. If they missed by 10%, you would say they missed by 10%. You would not say a negative 10% surprise. Surprise is always positive. On the versus last year, you don't say they beat or missed. You say they increase or decrease. You don't beat prior year. You don't miss prior year. You either increase over last year or fall short of last year. So then you talk about revenues, the exact same thing. Revenue growth was, the revenue was 7.9 billion. You can see that in the numbers here, 7.9 billion revenue last year. They beat by 1%. So they reported 7.9. The market was expecting 7.85, so they beat by 1%, and they were 5% above last year. It's kind of confusing in this paper because on the earnings, they did reported versus expected, then did last year. Here, they did versus last year, then versus they're expected. So it's a little confusing. But all three things, again, if you are better than last year, then you say it's an increase over last year. If you're better than expected, then it's a beat or a miss. Then the same thing on margin, exact same thing. What was the margins? Here, though, you talk in basis points. Were you higher than expected? By how many basis points? Were you better than last year? By how many basis points? Again, beat or miss versus expected, and increase or decrease versus last year. You can also talk about the EBITDA margins. So on the margin, you have gross margins and EBITDA margins. And the same thing. What did they report? What was expected? And did they do better than last year? After that, you got all the numbers. You could do some of this in graphs or, bar graphs or a table, but make sure you still talk about it. You probably want to add some adjectives or adverbs, like by a whopping 46%, or a substantial beat or a substantial decrease from last year. Then you start talking about the company. So what's going on here? They're talking about the industry, which is fine. Some quotes, that's what you want to do, is find some really good quotes from management, from analysts. That's why I gave you that Bloomberg intelligence, so you can get some quotes from them. Look at news articles, those are kind of things. So here you're just trying to get a sense of what's going on. So earnings, actual versus expected versus prior, revenues, the same thing, gross margins, net margin, and then a discussion what happened. And after you finish all of that, then you ask, how did the market react? So he's using the exact charts I gave you, which you can do. He added some more. We'll talk about what you could add more. But talk about the stock price. How did it do? What was the percentage change on that day? Showed a graph for that day. How did the market do? All that's in there. Now, he added something that I do think is pretty good, is year to date. So if you go back to what we did for them, for Netflix on that day, we can also look year to date. So I can put 12/31/2022 in here and say year to date, they're up 36%, but telecom's up 46. Why is that? Well, because Meta is in telecoms, and Meta did extremely well this year, even more. So Meta is such a massive stock that it really drove it. But you can see Disney is actually struggling quite significantly. And here you have the graph. I didn't put the graph on the one day because it doesn't really work. But if you do the year, you can see for the year to date, he showed the entire graph. So you can bring in things like that are really, really interesting, but you have to have the Bloomberg. But if you do it on Bloomberg, again, you can just snip and bring in the picture and add more power to your paper. Make sure you do talk about the day itself and how they did on the day itself. How did it do versus the market? How did it do versus key competitors versus the industry? And then the year to date, you can compare them. Here they compare them to the S&P and Disney, and telecoms, essentially the same thing I talked about. I just didn't put year to date in there, so you'd have to go get that themselves. Now, you may be thinking, wow, these Bloomberg charts are not that pretty, and they're not. However, it's really powerful if you're going to put this is a good paper to put on LinkedIn. If you're going to put this on LinkedIn, having Bloomberg charts in your paper is actually quite good. It's a wonderful thing to do because it shows that you know how to use Bloomberg. And while it's not the easiest thing to read, the size is hard to read. It's kind of small. As long as you talk about it in your discussion, they'll be able to tell what you're doing. And then they ask any unusual circumstances. We don't really need that. I think they misinterpreted my paper. But the main thing on unusual is if there was something strange between reported and comp that went on. So that usually is just one sentence. They kind of misinterpreted that. But you might, instead of here, is where does Netflix go from here? Remember, ending with a question is a good way to do it. Did the market overreact? Can Netflix sustain this outperformance, especially versus Disney? Whatever you want to do, or you can just say final concluding thoughts. Make sure on the final conclusion, you don't just repeat everything you said, but instead draw in the one or two most critical points you had above. So maybe for Netflix, it's getting past the writers and actors strike and increase subscribers with higher monthly fee, whatever you want to talk about, what's really driving this company. If you can get that down in that last conclusion, what should you be most focused in on? And you could even make that your title. What to focus on going forward. Because that's what your boss is asking. Okay, this is great. The market's reacted to great earnings report. But what should we be focused in on? What are they going to report in the months ahead? That's going to be key to figure out if we should stick with Netflix or if we should sell them now if you own Netflix. All right, so that's the nature of the paper. So this paper is due November 3rd. Here's the description. So you select the company. I'm going to give you the companies. So you want to talk to earnings per share, reported, expected, any unusual items that may not be, that wasn't the case for Netflix, so I ignore that entirely, and then versus prior quarter. Make sure you talk the dollars and the percent, miss, beat, and increase. Top line growth, same things, same four things. Bottom line, gross margin, net margin. I usually use EBITDA to revenue. Sometimes I have to use EBIT because Bloomberg doesn't have the EBITDA. So what are you looking for? Really, margin is if your earnings per share grew faster than your revenues, then they must be having some good margin expansion. And you can use that word expanded rather than saying margins increased 30 basis points. You can say margins expanded 30 basis points or contracted 30 basis points. Then you have the discussion. What's going on? What did management say? What are analysts saying? What did you get out of articles? What's going to happen going forward? And then the market reaction. How did the stock price do on the day that the market reacted to earnings? Again, very, very important that they reported earnings before market open on the 18th. You want to talk about what the market did on the 18th. If they reported earnings after close on the 18th, you want to talk about what the market did on the 19th. And then any discussion about what's just unusual, what's important, what are you trying to explain for how the market reacted, that is your paper too. As you can see, this student example did a really good job of adding some extra analysis, such as the year to date was interesting, and some good discussion of Netflix versus Disney, and a quote, only one quote. A few more quotes probably would have been good. You know, on a 16%, like you have a good quote to say whether the market overreacted or underreacted. Is 16% justified? That would be a great quote. So there's your example of a paper. Looks the same format that we use in paper one, with the two columns, the narrow margins, some good graphs, some good quotes. Full Justified that I like is just fits everything a lot better. So hopefully that helps you. That should be everything you need for paper 2. It's a faster paper because I've given you most of the data that you need. So really it's a matter of going out there and finding good articles. I do recommend you maybe come into the Financial Studies Center on the first floor of the business building, get yourself a Bloomberg account and do a lot of this on Bloomberg. Essentially everything you need is on Bloomberg. You've got articles, you had the Bloomberg Intelligence, you could see what analysts were thinking. There was a lot of material there that could be really, really quite helpful for your paper.